Hey everyone, welcome back. Hope you guys are having a great Thursday. Thank you so much for coming in to watch this video. And we have a couple of things to talk about in this video. Obviously, what happened today with Bitcoin, with the Bitcoin miners. We also have two production updates for you guys. We got Bitdeer Stronghold. And then we also have two quarterly results, Bitfarms and Stronghold as well. So we'll get through all that. It should be pretty simple here, I think. And then as always, the chapter is going to be down below for you guys to follow along that way if you want to skip to the sections you want to see. And as always, you know the drill. This is not financial advice, for entertainment only. Please do your own research and invest in following coins and companies for full disclosure. If you enjoy this type of content, hit the like button, subscribe. Helps me out tremendously, especially hitting the like button. Doesn't cost you anything, but definitely helps me out. But corrections will be posted to Discord, which is through Patreon, and then YouTube community posts and Twitter as well, if there are any corrections, okay? So let's get into what's going on with Bitcoin here right now, and we'll go from there. So Bitcoin actually was up today, had a pretty good day. It wasn't as great as it was yesterday, but it was up still today. It was up 1.23% on the day, closed at 66,938, which we're still obviously going up in the right direction into the higher prices range. So that is good. As far as the miners are concerned here today, they were kind of mixed. Bitdeer was up 4.25%. CleanSpark was up 7.51%. I think probably the best one performing here. Cores was up 5.21%. DigiHost was up 3%. And then Mawson was up 13% for really no reason there. I think it's just being manipulated there. Excuse me. Stronghold was up 5% on that one. I'm surprised that one was actually up today based on what they provided in the quarterly results or the fiscal year end year results. We'll look at those and I'll give you guys my thoughts on it as well. And then everybody else was pretty much down here on the day. So it was a mixed day on that, surprisingly. I thought the miners would be actually going up along the way with Bitcoin here a little bit. But we were still obviously early from the halving event. Not too early. I mean, we're only 40 some odd days away. I think that's weighing down the miners right now, and it will probably continue to do so until we get possibly past the halving event, unless Bitcoin goes up to like 70, 80,000. At that point, they might take off as well, but we'll have to see, right? We're in a new chapter in Bitcoin with the spot Bitcoin ETFs. Everything else is totally different from the last cycles that we've seen here. We obviously also reached a new all-time high in Bitcoin before the halving event, which has never happened before. So there's a lot of different things happening that didn't happen before, okay? Well, let's get into the stories that we do have here. And the first one's going to be on Bitdeer. So if we look at Bitdeer here, Bitdeer announces February 2024 operation updates. And here's what we got. Let's go down here. Where's it at? There's the information that we're looking for. You guys can read all the other stuff. They're talking about some of the new AC miners that they're obviously producing now as well. You can find all the information up here. And what we really want to what I really care about is wow, I can't talk today. What I really want to talk about is obviously what their hash rate is, how many Bitcoins they mined here. And their self-mining is still at 6.7 here. Cloud hash rate 1.7, hosting 13.6. So hosting is still the majority of their business there. And then Bitcoin mined here was 287. That's kind of what we have for them at the end of the month here. It came down here obviously from January of 330. That's a decrease of about 43, right? Bitcoin, so definitely a substantial decrease there. Infrastructure update, recent developments. Let's see here, they're talking about the Seal 01 ASIC chip and the Seal miner machines that they're coming out with. And I think you can pre-order those right now on their website. But let's get into their actual data here that we have on Bitdeer, and we'll call it a day here. Quick note, I just realized that I forgot to update the stock prices for them today. So the stock prices as of yesterday on all of these guys here. So I'll get this updated before I send this out to the Patreon members and the YouTube members as well. But this is kind of what we're dealing with. Not much of a change there actually. So currently Bitdeer has 111 million shares outstanding. Stock price as of yesterday was 659. Market cap was 700. I can't talk today for some reason. 733 million. Wow. It's been a long day, I think. That's maybe why. Okay, their production or their performance over the last 12 weeks has been on the downside, you could say. From 12 weeks ago, they're down 14%. From 8 weeks ago, they're down 9.9%. From 4 weeks, they're down 14%. Last week, they were only up 4.32%. So they are definitely underperforming compared to some of the other miners that we have seen here. Current hash rate 6.7, future hash rate 7.6 potentially. They're going to get to, they didn't report that they hodl anything, okay? And then BTC production here is the lighter color. Month over month difference is the darker color on this chart here. We can see that they mined 287. That's a decrease of 43 from last month. And that's been coming down here. The best month was actually in September, where they had 482 BTC, and it's been coming down ever since then. December saw a little bit of an increase here. Surprisingly, it didn't have a bigger increase because all the transaction fees being added in December accounted for about 20%. So at that rate, they should have had at least a 20%, like 80 more or so of BTC being added here. So for whatever reason, it looks like they curtailed a lot in December compared to everything else here. Revenue has been increasing as well, which is good to see. December was obviously their best month, 18.4 million for just self-mining. And then January came down to 14.16, which was actually below November numbers. And then February looks like it's a little bit higher from January. Obviously, the Bitcoin price has gone up. That's the reason for it there. Then we got hash rate here in the blue. Red is the hash rate difference month over month. And you can see that they were at 7.2 for a while, and then they dropped that down to 6.7. I think they utilized some of those machines for their other segments, business segments that they have. That's why they're currently at 6.7. Bitcoin sold, they sell everything that they mine here. BTC per exahash efficiency at 42.8. Not too bad, probably in the middle range here as far as miners are concerned right now for February. Bitcoin sold value there. Other metrics here. We'll obviously take a look at those when they do report their quarterly results, which probably, or fiscal year end results, I think, which will probably be in the next week or so, potentially. Haven't heard anything about them reporting those yet. Interesting to note here is the institution side of things. Institutions actually decreased here to 44 from 47 as of today. Shares also decreased to 7.2 million from 9.7. Percentage went down to 11.4 from 15.4. But we did get one added buy rating to them, which is now 3 compared to the 2 that we had here. Price targets are still, however, the same. So we have $20 for the high, 15 for the average, and 11 for the low. Okay. So something's going on there where institutions are getting out of them, right? I don't know if it's just lack of transparency, maybe the reporting that they do or whatnot, but for whatever reason, companies are getting out of that stock right now, which is surprising because I think it's the first one that I've seen that institutions have gotten out of in the last month at least. Okay, going down here, we got production update for February here. It looks like they were mining for about 24.5 days out of the month. We added about 801,000 in Bitcoin transaction fees. Hosting here, looks like it generated about this much here. Let's track hosting over here. But all in all, they generated 14.314 million in revenue based on the average Bitcoin price here in February. So we do that up here, 287 times the average Bitcoin price. We get the actual amount that they possibly could have generated at that point. Depending when they sold, we could be off a little bit on this. Usually we're pretty close. That's kind of what we're looking at right there. Okay. Going back up here, if we look at the numbers here, and I think I'm using the self-mining February, yep. So for self-mining February and hosting side of things, we're looking at them to be between $7.89 to $7.84, right? This is obviously looking at it from the revenue side of things for February, times in 1 month, potentially in March, where we have 100% of that being as revenue, and then obviously after the halving event, that gets cut in half, so 50% going forward. Next 11 months, that's kind of where we have them at on the price side of things. And then if we look at the historical numbers, last 3 quarters, current quarter that we're in, that's estimated right now, going to be between 1621 and 2432. That's kind of where the analysts have them to as well, between 20 and 11, somewhere around there. I might be a little bit higher on that. Maybe, there's not much growth left in them for self-mining, so maybe we can bring them down a little bit here to maybe 5 or something like that. And that would get us closer to the numbers here that we're seeing here. Well, that we were seeing here at least on the PE of 10 or PS of 10. Okay, so maybe $8.11 to $12.16 based on that. All right, so that's it for Bitdeer on this one. We'll have to see obviously what they report, finalized numbers for the fiscal year end 2023, and we'll cover that obviously when that does happen here. So next one is going to be on Bitfarms. So Bitfarms reports 4th quarter and full year 2023 results. I did not get a chance to listen to the earnings call. I don't know if they had that. I think they had it today, but I did not get a chance to listen to it. I may listen to it later on tonight if I have the time. But I was just busy in putting all this data for all of these guys here for their quarterly results. So that always takes a while to do that. But here's what we have. So they earned 1,236 Bitcoin in Q4 and 4,928 BTC in 2023. They improved their Q4 2023 gross mining margin to 52%, which is up from 38% in Q3 2023. So that's good there. Achieved debt-free goal in February, obviously last month. Enhancing financial flexibility, executing towards target of 12 exahash and 25 watts per terahash by the end of Q2 and 21 exahash by the end of 2024. So that's obviously really good growth there right now for them. Okay. I'm not going to read all of this other stuff here. You guys can read all that. It's obviously available to you. Let's take a look at the numbers that I do have here for Bitfarms, and we'll get on to the next one. So Bitfarms here right now has about 322 million shares outstanding. Market cap 850 million as of yesterday's price. It's probably down a little bit here on it. Current hash rate 6.5 exahash. Future that they have purchased so far is going to be to 12 exahash. So they definitely have quite a bit of growth there left. And if they want to get to 21 exahash by the end of the year, definitely a lot more growth there as well. Excuse me, I got to take a sip of my water. Okay. We'll look at the quarterly results here. So last 4 quarter results, we can see that the revenue has been increasing, which is good to see. Q4 looks like they were at 46.24 million. Current quarter, we're estimating about 51.95 million. So definitely a nice increase there as well. And it is going up, so that's going in the right direction as well. Last 4 quarters operating costs has gone up a little bit here. Obviously, they installed more miners. They got more facilities. It's going to have a higher overhead on that as well. But they also included bonuses and things like that in there as well, which obviously impacts this as well. Okay, custom line 1 Bitcoin mines depreciation stayed pretty close to where it was in Q3, 17.48K instead of 17.4. Bitcoin mined quarterly, Q3 was their worst quarter out of the 4 here at 1,172, and then Q4 we're starting to tick back up here as they're getting more machines plugged in, which is obviously a good sign there. Debt to equity, lower is better. They inched up a little bit here to 0.28. Their current ratio did go down a little bit here to 1.8, but they at least still have enough current assets to pay off current liabilities if they needed to at least 1.8 times over. And you can see here total current assets is 129 million, so that's an increase, and then total current liabilities is 69 million. Obviously, they purchase more miners, things like that, so that's going to happen to the data there as well. Okay, going down here to the actual quarterly results here. We are going to take a look at the Q4 numbers really to compare it to the prior quarter. And here's what we have. So current assets increased to 84, so almost doubled from the 46 they had in Q3. And then we have, let's see, trade receivables actually went down. Other assets actually went down as well to 2.1 from 7.1. Short-term prepaid went up to 6.3. Taxes actually was 0. And digital assets actually went up to 31.8 from 16. So obviously revaluing the assets that they do have. Obviously they've started to hodl more as well. That has helped out. So in general, the total current assets increased to 129.9 million from 83.7. So that's good there. Total assets went up to 378 million from 332 million. And going down here to liabilities, total current liabilities is at 69 million right now, 29 million before. Big increase here was the warrant liabilities, 40 million here that got added. And then let's see what else. Trade payables and accrued liabilities went up to 20 million, so about 3.5 million or 4 million roughly. Increase in that, so that's not bad. Total liabilities went up to 83.9 million from 45.2. Major thing was there, obviously, the warrant liabilities right there, 40.4 million. Okay. Total liabilities and stockholder equity is now at 378 million. That's up about 45 million, 46 million. In the upward direction, which is good. Revenue here obviously increased to 46 million from the 34 that they reported prior quarter. Expenses also went up to 36 million. Big thing here was, let's see here. That's not including depreciation in this figure here. Total cost of revenue was 44 million if we include all the depreciation as well. But the big thing on it was the, where is it at? I thought I saw it here. Energy infrastructure, that went up a little bit here. Depreciation stayed pretty close to where it was. Purchase electricity, that was a little bit lower. So was the electrician salaries as well. That went down a little bit. But here, actually, the operating expenses. And that came in at 13.4 million compared to the 8.3. We saw, obviously, a pretty big spike here in salaries and share-based payment of 8.9 million compared to the 4.9. So that's basically 4 more million in bonuses, things like that. Wondering how much of that was actually share-based instead of actual cash-based. Professional services went up a little bit here as well on them. Travel went up just a slightly. And then what else do we have here that kind of went up? Loss gain on disposition of property, plants, and equipment was actually up 13.5 million. And then impairment of short-term prepaid deposits, equipment, and construction prepayments, property, plant, and equipment, and right-of-use assets. That was obviously included here at this quarter for 12.2 million. So their total operating income loss was 32 million, which is obviously an increase from the Q3 numbers that we saw here. But a lot of it is based on them growing. And then obviously being the end of the quarter or the end of the year, fiscal year, they're going to dump in bonuses. They're going to dump in share-based compensation into that as well. And we've seen that with other miners as well. It seems like the typical quarter to do things on it. So net income loss came in at, total comprehensive income came in at negative 43 million here. A loss of 17 cents per share. Shares increased a little bit here as well to 262 million. On the average side of things, for the whole year, I guess, and then it probably should be higher up here on it. So that's basically what we got, right? We got a negative EPS on it. They weren't able to take advantage of the FASB rules because they are not a part of that. They're in Canada, not in the US. They use a different standard for that. And going back up here to some of the numbers that we do have for them here. We talked about the debt to equity current ratio. Book to value is now 294 million. Book to price ratio is 2.85. Enterprise value is 850 million. Beta was negative for the quarter, 24.3. And then EV to beta was also negative 34. Revenue, 46 million, right? General administrative compensation was 13 million. That's 28%. So that's actually gone up here. And like I said, that's mainly because of bonuses probably. But it has been going down in the right direction. It was going down in the percentage wise, which is good. We want it to be probably below 20, if not better, right? And then current number of shares is 334 million. That has increased 49% from last year. If we look at Q4, probably, yeah, I think we're doing that Q4. Let's see here. Q4. Yeah, so we're looking at Q4 to Q4, basically increased 49%. And then over the quarter here, from the previous quarter, it went up 20%. And dilution, it looks like right now. Okay, that's fine with me. They're growing. That's what we really want to see. A big thing here is the custom Bitcoin miners depreciation was 17,000 for the quarter. For the year was 16,000 here. And what else can we say? That is basically it for them. It's kind of what I thought. I thought the EPS was going to be negative depending on how much stuff they put into it. I was kind of thinking that they were going to put in share-based compensation and bonuses at the end of the year. So that got all added in. So we were going to be negative, even if they were able to revalue part of their HODL position. I don't know how much they had at the beginning. Let's see, what was their HODL at the end of November? 804. So it stayed pretty much the same here. If they were able to revalue that from the prior quarters or something like that, they probably would have given them a pretty big boost there. They might have had a positive EPS at that point. Okay, but that's it overall. Not too bad. It wasn't great, but it wasn't too bad. Obviously, I think Q1 is going to be better for them. They're mining more. They're also generating more revenue here so far compared to what they were in the third quarter, or excuse me, the fourth quarter. So that should improve as well. And them growing will also help. Bitcoin price going up in value also helps as well. Okay, so that is it. Let me know what you guys think of that one. And then let's get into the next one here, which is going to be on Stronghold. And we'll call it a day. So Stronghold announces fourth quarter 2023 operating and financial results. Here are the numbers for them. And I just realized something on them today, at least, that they were reporting their numbers for Bitcoin mined, which included also their hosting side of the business as well. So I'll kind of explain here a little bit. And some of the stuff is a little misleading by them, I think, because they're including both of those things. And I don't even know if they might not be including other things into it as well. Based on what I'm just seeing here, at least with the numbers, we'll explain here in a second. Okay, but here's what they achieved. They achieved 3.8 exahash of actual hash rate on installed hash rate capacity of 4.1 exahash following the installation of 5,000 recently purchased Bitcoin miners. The company has less than 1 million of outstanding capital commitments for miners heading into April 2024. Okay, so they're saying that they got to 3.8. They're supposed to be at 4.1. If we look at the numbers for them really quick on Stronghold here, on just their own miners here that they have, I did some research today. It looks like they have about or at least they did have 1 exahash of hosting. But based on what they have right now, it would be 4.7, roughly 4.7 exahash for their self-mining. So I'm wondering if they got rid of some of this hosting here. I don't know if that's the case. That's just a thought that I have right now. I haven't heard anything from them on it right now. But they have been reporting, I think, for BTC mined, including hosting, possibly other things as well, because if you look at the numbers here, which we'll get into here shortly, I'll show you guys what I mean by that, okay? But going down here, they still have a room for about 7 exahash. So total 7 exahash they could have installed. So that's only about 3 to 2 exahash away or something like that. Scrub, where's the other stuff? Bitcoin mining update. Here we go. So here's the production update for February. They mined 170 Bitcoin in February and generated approximately 0.2 million in energy revenue, which represents the equivalent of approximately 3 additional Bitcoin based on the average price of Bitcoin during the month. But which month? Is it the month that we're in right now or the previous month? Because if it's the previous month, you're looking more like possibly 4 or 5 Bitcoin being added to it, right? So that's also, they're not as detail oriented as some of the other miners are on this. And the way I can say this is, right, they're not breaking the stuff out for self-mining. They're just reporting there's 170 Bitcoins, not Bitcoin equivalents or nothing like that. And if we look at the numbers from January here, they did the same thing. Stronghold mined 182 Bitcoin in January 24, generated approximately 0.4 million in energy revenue. That was obviously 10 additional Bitcoin there on top of it. So they're counting that as 202, but we're using the 192 there. So it doesn't look like they're using the energy revenue side of things for it there. But it's still confusing nonetheless. So let's get into the numbers here that we have for them. And I'll try to explain this as best as I can. We'll get into these numbers here when we go into the quarterly results here a little bit, and I'll try to explain why I was off by 5.13%. If I included the energy revenue in here as well, I would have actually been pretty close, dead on. So that's why I'm guessing, second guessing myself as far as what are they including in the BTC production numbers, right? Are they including hosting and the energy side of things as well, or are they not? In here, we were only off by 1.75%, which included everything as well. So I'm a little confused on that, at least right now. But here's what we do have. So currently they have 11.9 million shares outstanding based on what they reported here recently from their financial reporting for the fiscal year end. They are at 50 million market cap right now. Current hash rate, I have them at 4.6, almost 4.7, right? They're saying that they're at 4.1. So that makes me think that they get rid of some hosting in there, because I was counting hosting as well, which unknowingly I was doing that. And then they're pretty much fully operational right now. Okay. I got to look through their 10K numbers to see if they actually have a HODL. This was reported a while back that they had 50. That'd be worth about 3.2 million. And then here's their BTC production here, 170 in February. That's obviously been coming down ever since. Well, they've been kind of flat, or at least bouncing around the 190s, 200 mark for quite a while here. But they're down 22 Bitcoin here from the prior month. BTC revenue here, they peaked at 8.8 million in December. They're at 8.2 in January, 8.4 million in February. And then their hash rate, as you can see here, has been kind of flat at 4 exahash roughly for about, what is that, 6 months or so, since August, really, through January. And then we got a little bit of a jump here, at least I think we did, unless they actually took out this hosting part of it, at least from the hosting side of things. BTC sold value, they pretty much sell everything they mine. BTC per exahash efficiency is down to 36, so that's on the lower end of things. BTC sold value, they sell everything. And then quarterly results, so we might as well go through this as well. Current quarter came in at 21.74. That includes everything. That includes hosting, self-mining, energy, and other, whatever that might be, the other part of it. Current quarter, we're looking at 30.3 million, and that would probably be including everything as well in there. Okay, so that has been coming up, but they've been kind of flat here for the last 3 quarters. 17.2 million in Q1, 18.2 in Q2, 17.7 in Q3, and then obviously it jumped to 21 here, so that's at least good there. Last 4 quarters operating cost minus depreciation, so I'm not including depreciation in that. That has been coming down, so that's actually a good thing there. They need to have that come down even more. Okay, cost to mine 1 Bitcoin minus depreciation was at 24, still relatively high here, 24.7 thousand per Bitcoin. Bitcoin mine quarterly includes hosting. So 598 in Q4 only, right? Q2 was probably their best month here, 626. So they are not keeping up with the network hash rate increases with their growth in hash rate. Debt to equity, lower is obviously better. They're at 2.5 right now. So that's not the way that we want it to go. We want it to go in the opposite direction. We want it to go down. We don't want it to go up. Current ratio is higher, is better. They're actually starting to bring that up a little bit here. So not much, but still a little bit. Total current assets was at 17.6 million. Total current liabilities, 35 million right now. So still not a healthy balance sheet there. If we look at institutions here, institutions did increase on them to 58. Shares increased to 2.1 million from 577. They're now 20% owned, it looks like, by institutions, which is surprisingly that jumped up so much there. I think institutions are buying into them for their carbon capture program that they're doing right now. I think that is what maybe is driving institutions into it. But we still have one strong buy rating, one buy rating, one hold rating, 0 underperforms, 0 sells. Price target at $22, average at $12.23, and low of $7 right now. Going down here, like I said, these numbers seem to appear to have everything included for their actual revenue. And down here, as you can see here, they reported of the 170 Bitcoin being mined, right? In the month of February. This brings us to here, which with all of that, and I add 474,000 in Bitcoin transaction fees for the month, that got us to the 8.478 million, which coincides with right here, based on the average Bitcoin price at that point. And I had to have the miners, or their installed miners at least running for 20.8 days, and then new miners running for 20 days on average. I don't know when they got plugged in, so I usually plug in 20 days on those. And that's kind of what we got to on those numbers. If we took out some of these potentially miners here that are for hosting, bring it down 600 petahash, maybe at that point, their numbers here for February would be up higher as far as uptime. Maybe, I don't know, right? That's why it's confusing. And I wish they would separate this out because I think that is misleading to investors because usually self-mining generates more revenue. You have better margins when Bitcoin's going up. Hosting is usually a lower profit margin business, usually around 15. Maybe you can get 20% margin on it, unless depending on what kind of contracts you have signed and everything else like that. That's why I think it's a little misleading by them. I wish they would separate it out. Maybe they are watching this. Maybe they'll do that. We'll see. But definitely would like to see that separated out. Okay. Going down here into the actual financials. Let's see. Current assets, like we talked about, 17.6 million. That's an increase here from the 12.3. So that's pretty good there. Total assets actually slight increase to 174 million from the 172 that we had there. Total current liabilities, 35 million. That's obviously an increase from the 28, so about 7 million increase in that. Total liabilities also increased to 110 million from 93 million, so you're looking at about 17 million roughly increase. Let's see, what else do we have here? Total liabilities, stockholder equity is 174 million, so a slight increase from the 172 that they had. And then here we go, we're getting into the revenues. So they reported, here, cryptocurrency mining was 15.1 million Q4. Energy was 1.1 million. Cryptocurrency hosting was 5.4. So that's obviously gotten better here a little bit. And then other was 67,000 on it. Total operating revenues was 21.79 million. Right. So remember that number, 21.7. If we go back up to my numbers that I had for them, 21.7 right there. Right. Are they including everything into those BTC mine that they're calling it, which they shouldn't be calling it. They should be calling it BTC equivalents. And breaking it down of what they're actually doing. Because that leads us to think that they were self-mining all of that, okay? That's my little rant there on it. I don't like it when companies pull everything into it and try to pull the, was it the sheep's skin over our eyes or something like that? Whatever that saying is. Pull the wool over our clothing or whatever that, I can't remember what that saying is. But here's what we got. Obviously, 21 million was the total revenue here. Percentage of self-mining revenue was about 69%, right? So that's actually seems to have like it has come down a little bit here. And it's been coming down for the last 2 quarters, it looks like, that we can see here. Operating expenses was at 14.7. That doesn't include depreciation and other things. We're just looking at fuel operating and maintenance in general, right? If we look at those from the prior quarters, we can see that fuel actually came down to 6.3, so that's good there. But operation and maintenance actually went up to 8.6. So those two kind of got offset by each other pretty much. General administrative was actually down to 6.2 million from 6.5, almost 6.6. So that's good. A slight improvement is better than none, which was good. Depreciation was about the same. Loss on sale of fixed assets. So looks like they had a gain there. What else do we have here? Total cost of operations was 34.2, so that's definitely lower than the prior quarter, 37.4, which is good. Then operating loss was negative 12 million compared to negative 19, so that's good there. And then if we look at operating loss minus depreciation, that was only 3 million instead of the 10 million, so that's looking a little bit better there. Going down here, other operating income, interest expenses was about the same. Change in fair value of warrant liabilities, that came down, actually went up to 6.2 million. And then total other income was negative 8.6 million, it looks like. Net loss attributable to Net loss attributable to non-controlling interest was negative 3 million here. Net loss was 21 million here, it looks like. And then deemed contribution from exchange of Series C convertible preferred stock, it looks like they got 20 million. That's why they were able to squeeze out a potentially profitable EPS on Q4 here. Mainly because of these two things here, it looks like, on that. So they got 34 cents per share basic, which basic was basically 9 million shares. And then diluted was 11 million on that one. And then they're reporting loss of $7.46 for the full year based on basic and diluted, which was 6.8 million shares. Okay. If we did not include depreciation on any of these, they would be down $2.27 per share on the full year, and then on the quarterly, $1.38 potentially. Okay, so definitely depreciation has a big impact, obviously, on the EPS things. Okay, so that's how that has all shaked out. Going back up here to some of the metrics that we do have here. Cost to mine Bitcoin, like I said, was 24,000 here for the quarter, which is a decrease from where they were, which is good. For the year, they were at 26,000. Enterprise value for them is 80. Debt to equity, we covered that already. Book to value of equity is 63 million. For some reason, I'm getting billion here, looks like. I need to fix that. I got too many. I'm multiplying it times 1,000. That's why. I should be multiplying it times 1,000. Yeah, that looks much better. I'll go across the board here. There we go. There we go. Okay, price to book ratio 0.785. Enterprise value market cap is 64, negative 64.6. EBITDA was 14 million for the quarter, and EV to EBITDA was negative 4.3 on that one. Okay. Self-mining revenue was 15,000. If you just look at general and administrative compensation on that, was 6.2 million. That comes out to be about 41% of it. It has been coming down, right? But we still want it to be much, much lower. That's why I'm saying on that kind of things, when we look at the revenue here, if it's just for their self-mining or even total mining here, it's 21 million. Their three biggest costs here are fuel, operating, maintenance, and general administrative. That's 21 million. So they're almost breaking even here for the quarter on Q4. It's 21.24, so they still lost some on it. But then you include other things as well into it, and that's where you get the loss. So if you look at it here, they had 17 million, and then here it cost them 22 million, right, in revenue. So they're at least going in the right direction. We'll see how they can do in Q1 of this year. But that is basically it, I think, for Stronghold on it. Pretty much covered everything else. I don't know how to properly value them for right now. I did drop it down to P or PS of 1. They don't have much growth left in them. Actually, very little growth. They do have the option to buy some more miners to add an additional, I think, like 300 petahash or something like that. But that's about it. So if we look at a P of 1, because there's really no growth, they have to deal with, obviously, the debt that they have. We're looking between $3.64 to $5.47. They're currently at $4.20 as of yesterday. That would be fairly valued. If you give them a little bit of growth here, they could, obviously, because they don't have a lot of shares. 1 PE up or something like that gives them a huge increase. So maybe let's put them at 2. At 2, we get them to $7.29 to $10.93, somewhere around there. But they're valued because they're having issues, obviously, right? We can see it here on their balance sheet. It's not looking good. Their debt to equity is not good. Current ratio is not good. So all those things are obviously contributing to it. The only good thing is that the growth in revenue is growing, but that's mainly attributable to Bitcoin mining. And we definitely need to see them cut some more costs. Then we'll also see how they do with the carbon capture, right? How profitable is that going to be for them? Will that help offset some of the other costs that they have, some of the losses? Maybe, maybe not. And maybe that's what kind of institutions are looking at on that side of things, where that could be obviously beneficial, because we've seen obviously a pretty huge increase here for them and institutions just in the last month alone. Okay. Let me know what you guys think of them earlier, I would say a couple weeks earlier, a couple months earlier. I was thinking that they may not survive the halving event. I did update this for them, the miner analysis part of it. Stronghold right now, if Bitcoin was to be at 65,000, network hash rate 570 right now, at the time that we get the halving event, right? With the costs that they have right now, based on, I'm using Q4 numbers and all of these things that they reported here, they would possibly have maybe 2 days or 2 months worth of runway in them right now, based on this information. The only saver for them might be if Bitcoin goes up to like 75, I think, or higher. Let's do 75,000 for them right now. And at that point, while you're looking at Stronghold, would have maybe 3 months worth of runtime. So they definitely need Bitcoin to be much higher than where it is, or they're going to have to dilute. They're going to do something. But that's kind of the way it's looking at it right now, at least. Okay. And that's based on their average uptime for the last 5 months. So I'm calculating that, putting that in here, what the revenue possibly could be at that point, based on 30 days of mining with what they actually have right now, right? Because we're looking at the numbers here for Sphere, which is for, we're using January. Let's even plug it into February here. We'll get maybe a different number. So that's that one. Let's look up this one as well. What's the wattage here? And let's see here, 2.95 as well. Okay, so that didn't really change much. So we're still looking at about 3 months of runway potentially with the current assets they have, but they have debt they need to pay off and everything else. So it's not looking good for them, at least come having it right now. Bitcoin would probably have to be, let's see. Let's get Bitcoin up to 100,000. If Bitcoin gets up to 100,000 at that point, they might survive. Yeah, they would survive at that point. They would have some runway for them. Obviously, also the Bitcoin network hash rate can come down because other less efficient miners are going to be plugged off. So let's just say we get down to 485 in the exahash, right? We have about a 10% drop in network hash rate. At that point, they could be probably even lower on price, maybe 85,000 at that point. And they're still profitable at that point if the network hash rate drops down. So there's a lot of variables that go into play into all this. Okay, but I'll leave it at that. I think that's it. We'll go through all of these miners here once they all report for their fiscal year numbers for Q4. And then we'll take a look at how everybody stacks up and what that is. And we'll obviously be closer to the halving event. We'll see where Bitcoin is at that point and where the network hash rate is at that point. And we'll just see if there's going to be any actual miners being plugged off at that point. Because if Bitcoin goes to like 85, 90,000 before the halving event, well, a lot of these miners are still going to be profitable at that point. So network hash rate may continue to increase actually, which at that point will still possibly be harmful to some miners here, like we can see right now. That we got at least 1, 2, 3, 4, but some of these guys are based on old information from Q3. So we need the newest data possible to see what's actually going on there. All right, I'll leave it at that. Let's go back to Stronghold here. If you guys enjoyed it, obviously hit the like button, subscribe, and my little sales pitch here is all the spreadsheets are going to be available to my Patreon members. We'll get the stuff all updated for the recent pricing on all these guys as of today. That gets updated to them today. YouTube members also get this as well in a PDF format. And then still $8 a month through Patreon. You might have a couple spots that are $5 and $4 as well. You get access to that, plus the Discord server, which is private for us as well. A lot of great communication happening there. Okay, I think we've pretty much covered it all. Thank you so much for coming into. Oh, and my video stopped working again. Oh, I love these updates on programs. Yeah, see, both of these don't work. Both of them. Okay, well, sorry guys. We'll see if we can get this fixed. See what's going on there. Maybe get an update for that program. But overall, thank you so much for coming in to watch this. I hope you guys have a wonderful Friday. And we'll obviously do a video on Saturday. We'll do a live stream. And then we'll also do on Twitter Spaces at 4 o'clock on Saturday. So if you guys want to join there, hey, look me up on Twitter. You'll have the information there as well. But other than that, I think that's going to pretty much cover it. Oh, also, I wanted to say thank you for you guys for the well wishes for my wife. She is doing better. So thank you for that. I'll see you guys in the next one.